Alright guys, welcome back to another video here on the Dividend Doggo Show on YouTube, and I am bringing you into the weekly portfolio review. This is the close of market on December 31st, 2021. It's already been kind of a rough day. The market was good, but we lost an amazing celebrity and a very entertaining woman, Betty White. So not to bring down the cast as on a negative note, but that is very sad. And, she was an amazing person and did amazing work for a lot of different people, helping people through World War II, and is literally older than sliced bread. But absolutely amazing woman and will be missed. The stock market definitely went forward and was pushing for the all-time highs. That Santa rally was definitely real. Going into the first week of January, I have no idea what to expect, but you're about to see some crazy changes to the portfolio. I'm going to go over what I bought this week, what I sold, because I did sell some positions, and we're just going to kind of dive in there. Now, I'm going to briefly just kind of go over what the categories are real quickly here in the pie and how I have everything structured in case you're newer to the channel. In healthcare, we have a couple of stocks. That's going to be AbbVie and Johnson & Johnson. I made an AbbVie position 2019. I started buying up AbbVie, and as you can see, it's kind of grown into an absolutely wild position here with a cost basis of 88,000 but an overall value of 140,000. It has certainly gone up pretty significantly. If you were to buy today at these prices, the dividend yield is only 3.76%, which is absolutely wild, and the PE ratio is pretty high. So this is a stock that I plan on holding and just collecting the dividend because I believe my yield is well over 6% on this stock. So I'm just kind of holding that position, and going forward, I'm going to reinvest the dividends likely toward ETFs. So I'll get into that in a little bit in just a few moments here. But as you can see, the consumer pie, we've trimmed one thing out. That was TAP. I bought into TAP kind of off the hype of the Rocks energy drink and watching Dumb Money on YouTube, and it's a very low conviction stock for me. I never put that much into it, a little over $1,000 I think, so I went ahead and sold it and redistributed that money. You'll see that sale, but as you can see, overall the week, Target had a crazy week, Home Depot had a pretty crazy week. All in all, absolutely wild. Going into the last week of the month of the year, VST, man, this is just pushing up numbers again. I knew that when I was buying the stock earlier this year and selling positions to buy into the stock, I knew that it was going to be a position that I would just have to be patient with and wait. I did not expect it to go from like lows in the 15s where you could have bought it earlier this year. From 24 to like 15 was, I think, the low point and the high point, and it's already back to 22.77 for the end of year. So it has made an absolutely amazing rally back to nearly its highs. I'm just going to continue to hold this one. I did get the dividend in this morning, and you'll see what I did with that here in just a moment on the activity page. The dividend was 900 and I believe like $26. So that was a pretty hefty dividend from VST, and I'm absolutely loving that. Now, if you've seen prior videos, you would know that I am pretty heavily invested. I was heavily invested in tech, and I sold some of the Apple position off earlier this year. You can see that there's been a pretty massive portfolio change this week, and I bought back a huge position in Apple. I put some into Microsoft and some into Apple, and I'm going to try to keep these weights pretty consistent going forward at 70% into Apple and 30% into Microsoft. Unless some pretty wild news comes into the gaming sector and some changes with Microsoft, I'm comfortable with leaving it at 30% and having Apple just kind of rule the roost on the tech pie here. In the future, I might add some Google in here, but that's not really a dividend stock, but I just kind of want to own it. I'm thinking about that, and we may go forward with that. So next, we're going to move into Como Money. Como Money went up a little bit. As you can see, we added some to this position, and I'm going to leave the weighting as it is here, and just kind of continue to buy in as I can to SCHD and build that up. I think I want that position somewhere in the 1 to 200,000 range in the future going forward for the portfolio. I'd ideally like to get this all the way to the top and be the top slice, and that's why things are kind of weighted the way that they are right now. If anything happened, auto invest, which I'm actually going to turn back on. I just remembered that I had turned it off to do some trades. So we're going to update that, and that is set and good to go. It's as simple as that. To turn on auto invest, you just tell it what you want the threshold will be for the money in the cash balance, and then it'll auto invest the pie for you. So finance sector, absolutely stellar week for Hingham. I really wish that I had bought more of this stock. When I started buying it up, it was like $300 a share, and now it's 420 almost. That's a really stellar, crazy purchase history, because I started adding not that long ago. I think I've only had this for September. Yeah, July 15th is when I started buying in this, and it's gone up, almost 40% money weighted return in, just 6 months. So not even 6 months. So it's absolutely wild. I wish that I had had a little bit more conviction after looking at the numbers on that stock. I looked it over. I decided I was going to make it a position, then just didn't really add quickly enough to it. You just never know when a stock is going to go on an absolute tear like that and just rock your world. Industrial pie, you can see that we have trimmed something out of this pie. That would be 3M. 3M has been pretty flat for me for almost 2 years, with a fairly low dividend yield, just under like 4%. I just feel that money is better invested elsewhere. I am still kind of bullish on these three. I might add a little bit to these. Mainly I'm bullish on Lockheed Martin right now. I think that they're the only one of these that's a true, like, air quotes here, value play. For right now, I think that buying them at their current setup and their current yield is pretty solid. And in monthly dividend stocks, we have trimmed everything out of here except for BST, and then my owner's rewards pie for the credit card. So BST going forward will be the only thing in the monthly dividend stock. I wanted to pick up Stag, but I feel like I kind of missed the boat on that, and it was never really a high conviction play, and I'm trying to trim things down for going into 2022. So the goal of this portfolio has always been to get $80,000 worth of dividends. So I'm working a little backwards here, because I cut a lot of stocks that were high yielding. I cut all of my oil stocks. I cut a whole bunch of things that were, EPD was an almost 10% yield. So cutting those positions means that I'm earning less in monthly income overall and yearly income via dividends, but I am maximizing the growth. And a lot of those positions, especially with the REITs, I'm heavier taxed on, and we don't plan to retire for many years. So that's kind of the way that I look at things right now. Is a lot of the REITs I was very low conviction on to begin with. So you can see, I'm going to go over first what was happening at the beginning of the week here. I did do a buy, which was kind of funny because it was into Store Capital. I'm not even going to bother to click on it because I sold it after the news broke about Volk being outed from the company. I'm just not interested in holding it anymore. The taxes are high on it. It's ordinary income tax instead of a qualified dividend. And I don't know. The REIT growth could be good, but I would rather just allocate that money into a couple more high conviction plays. So you can see I had $81,000 in sales, including ABR, which was a semi high conviction play. I do think that ABR is going to do good going forward, but I'm weighing the tax benefit between the overall yield of the portfolio and the potential growth of the stocks that I'm putting it into. As you can see, where I allocated the majority of the money from these sales was into Apple, Microsoft, SCHD, and Target. I think those are just higher conviction plays for me overall. There might be a little bit of blowback in the comments if you think I'm crazy for selling out of all of these and reallocating the money. Let me know what you think, and I'm curious for some input on that. But I have a much higher conviction on Apple for the next few years and Microsoft and SCHD than any of these stocks. And some of these just hadn't been performers really at all. PIMCO was an income fund that, I'll be completely honest, when I first bought into it, I didn't really understand. It hadn't even really fully recovered from the pandemic. So basically, this was like a neutral for me. It wasn't really a loss, it wasn't really a gain. 3M, again, was a very neutral sell, so I won't really owe taxes on this. EPD, I will owe a little bit of taxes on, but not much. ABR, I will definitely owe some on. Everything else is just kind of neutral or a little bit up. So that was the big setup there. That was how things changed, and I restructured. There's a lot less stocks that I'll need to really worry about digging into. I do think Vici has the opportunity to grow significantly over the next few years, but overall, it is kind of what it is. I'm just not that interested in holding REITs right now. Being a real estate investor, the tax benefits that you get for being a real estate investor are significant. And if I've got a whole lot of money allocated into REITs, I'm asking myself the question of why not just buy another rental property? And the answer is pretty simple. The rental property is the better option to go with. For me, in my situation, I should clarify. So going forward, you see, we had some dividend income come in. Domino's Pizza paid us 8 cents, owner's rewards right there. Although moving out of LA and to Seattle, I don't know if I'll be ordering Domino's Pizza all that often, because we have Mod Pizza relatively close. So that's a significantly better option. But anyway, these sells were just the last little bits that didn't get sold off in the morning trade. So those just got re-added into a purchase for SCHD. $25 went right back in there. VST's dividend payment came in this morning. It immediately got rolled straight in to more shares of SCHD. This bought an additional 11.4 shares. That's absolutely amazing. I can't believe that SCHD is already up over $81. I definitely want to try to get that position built up a little bit more. But as you can see, those are some pretty wild changes for the portfolio going into 2022. Back a little tech heavy, growth heavy. See how things kind of roll for 2022 and what the dividend increases look like. Again, this portfolio is being designed to give me $80,000 worth of dividend income. We're already over a fourth of the way there. The portfolio currently yields over $20,000 a year. And I needed to get to that point within the next, hopefully 10 to 12 years. And I'm going to try to slam as much money as I can continually into the portfolio to build this up. I feel like I just celebrated the 600K milestone not that long ago, and the stock market has just rocket shipped up to, 700 grand in the portfolio almost, where it's $695,945.95 in the portfolio. And that's absolutely wild to me that the gains for this week alone were $13,900. It's just staggering. This is truly the power of getting your dollars to work for you and being invested in quality companies and seeing things grow. I know that we're in a bull market again, and that we'll have bear markets in the future, and there will be more buying opportunities for stock. but a 2% portfolio return on 1 week, especially ending the year this week, is absolutely stellar. I am going to try to get you guys my yearly portfolio review. That's why I'm focusing this one clearly just on what I did this week in the market and changes to the portfolio. I will add a description link that'll show everything so you can see all the stocks in the portfolio right now today and how they're weighted. And if you are interested in taking advantage of the referral link, if you start your portfolio with $100, you'll get an additional 50. I believe that's only running for the end of December. I don't know if that's going to be going forward into January. So if you see this today and you want to start, that's a great way to start. It'll get you an extra 50% on that $100 that you're getting started with. So thank you very much for watching. If you have any questions about why I went this route, you can drop me a comment down below. If you feel like I'm crazy for having sold off a specific stock, let me know down in the comments below. But I do want to thank you for watching, all of the new subs, everyone who's been watching and subscribing. I absolutely appreciate every comment, every like. I try to reply to all of them, and I try to answer any question about my portfolio. So please feel free to drop me a note. I hope that you're having a happy, safe New Year's Eve and have a blessed week going forward. Be careful tonight if you're out on the roads driving. Be very, very safe and cognizant of drinking and driving. This is the #1 night out of the year for it. So be very cautious and careful, and thank you very much for watching, and I will see you very soon with the yearly portfolio review, where we're going to go over how I got a total growth change in the portfolio of over 50% in 1 year. It has been a staggering year. Thank you very much.